Thanks, Bob, and thanks everybody for coming out tonight. And again, thanks to Norbert for being co-host of this series. Once again, we look forward to that collaboration going forward next year. We're also very pleased and honored to have Professor Mark Copelovitch with us from the Political Science Department at UW-Madison. I think we've had now probably half of all of the political science faculty at UW-Madison. And they've been very generous with their time coming here to Green Bay and giving some great talks. So this one certainly will live up to the UW-Madison talks that we've had. Professor Copelovitch is a professor of political science and public affairs. He is the director of the European Studies Center at UW-Madison and is affiliated with the Center for German and European Studies and the Jean Monnet European Center for Excellence. He is also part of the Robert La Follette School of Public Affairs. He studies international political economy and international organizations with a focus on the politics of international trade and international finance. So there couldn't be a better speaker more appropriate for our topic this evening of tariffs and the world economy. He has numerous publications that I don't want to go through, but I'll just mention that one of the more recent ones that is applicable here is a book about the International Monetary Fund in the global economy. We were chatting on the way over here, and we have a shared interest in European politics, some of the issues about the austerity, currency crisis and everything. So we're in for a very interesting talk tonight. So without further ado, please help join me in welcoming.
Thanks, everybody. Thanks to Bob and David for the kind introductions. Thank you for coming. It would be great if the Political Science Department at UW-Madison was less in demand because there were fewer things going on in the world. But it's nice to be here and try and talk about and make sense of some of the things that are going on. As David said, and Bob mentioned, when we talked about this initially, I don't know, this was almost a year ago. I think the topic of the day was tariffs, and I'm going to focus my talk on trade policy and tariffs and what's been going on with that. But I did, a group of us in the political science department just last Wednesday did a panel on the Iran war, and my job was to talk about the oil and the Strait of Hormuz and the global economy consequences of that. I probably won't get through all of that in the time I have allotted, but I'm happy to kind of pull those slides up and take your questions and whatnot in Q&A. So what I want to do is I want to talk about how Donald Trump thinks about trade. I want to take us, for those of you that haven't, or it's been a long time since you took Intro to Economics or a political economy course, a little bit about trade economics and politics 101, and think about like what is the problem that tariffs are trying to solve, both economic and political, and then a little bit about is it working and who the winners and losers are, and then I will touch on the question of is any of this actually even legal. And then I will step back and zoom out, and this is, talk about the future of the world economy, which I also think is related to some of what my latest research is on like the future of world order and America's role in international relations, where trade is just one part of broader debates about, the end of all things and the liberal order and American power and hegemony and kind of what does international relations look like. And so I'll talk about that. And again, if we have time, I will get to the consequences of the war. So a lot of charts and pictures because I like those. And I teach Intro to International Relations, so I use a lot of slides and pictures for the students. But I want to take us back to 1987. Some of you remember 1987, others in the audience don't. When we think about what are the things that Donald Trump sincerely has principled beliefs about in politics, there are really like two things of all the things that he repeatedly has come back to in his 2 terms as president now, and actually go back a much longer period of time. So this is September 1987. Donald Trump went on the Larry King show, one of the big talk shows of the day, and he took out a full-page ad in the New York Times, which you can see on the right. The gist of these 2 things were that Japan and other countries are ripping us off, They are free riding on defense and security. Right? Our NATO allies in Japan are not paying enough for security. And the solution to these things, so America will no longer be taken advantage of economically and geopolitically, is tariffs. Right? So in many ways, like what's going on with trade policy, as I'm going to talk about, is very much unprecedented and a massive departure from American trade policy over the last almost 80 years now. But for Donald Trump, it's in many ways a return to first principles. Right? And that is also a return to a very old way of thinking about trade, right? So the old men, dead white men you're looking at on the right are Adam Smith and David Ricardo, who were the intellectual godfathers of the logic of free trade. Right? So Adam Smith writes The Wealth of Nations in 1776. David Ricardo comes along with his famous book in 1817, invents the principle of comparative advantage. And we move through 200 years of economics and politics, where the starting point is economically free trade is the most efficient thing. Politically, it creates lots of problems, but at least economically, we know like the thing that government should do is move towards free trade. Right? The world economy for centuries before that, right, and why The Wealth of Nations and Smith and Ricardo's ideas were so revolutionary at the time was the polar opposite of that. Right? Smith and Ricardo come along and basically say countries should produce what they can most efficiently. Everybody should trade. That's going to make the size of the pie better, increase wealth and economic growth. Before that, the idea was that trade was zero sum. Right? Exports were good, imports were bad. If you ran trade deficits, you were losing gold to other countries. And the idea is you actually want to trade as little as possible with your military and geopolitical rivalries. Right? So that's what the world economy looked like. Right? If you remember back to learning about colonial times and the triangular trade, right? That was the British Empire having its closed mercantilist system, right? Slaves, raw material, British textiles, right? And a closed economic system. The Spanish had their empire, the Portuguese had their empire, the French had their empire, the Dutch had their empire. There was a lot of world trade, but it was within these closed systems, right? And the idea was zero sum. Britain and France don't want to trade a lot with each other and move towards free trade because they're fighting wars with each other. We spent the better part of American history moving away from that. Right? So what you're looking at here is customs duty or tariff duty as a percent of all imports in the US economy, all the way back to the beginning. Right? I'm trying not to trip on the cord here, but you can see, right, basically until World War II, we were a very protectionist country. Right? We, like lots of other countries that are now rich countries and broadly have moved towards free trade since World War II, started as an agrarian society, built up industries behind big tariff walls, right? And protectionism was the norm. That changed, right? If you look at 1940, 1944, right? Post World War II, right? Most rich countries and progressively over time, most countries of the world move towards freer and freer trade. Right? So you'll see we went from 60% of our trade before the Civil War was covered by tariffs to somewhere single digits. Right? And then you see, right, it looks small in the long run of things, but the departure of tariffs under Donald Trump is winding back about 65, 70 years, right, towards more protectionism where we were at the end of World War II. So I'm going to get into the economics of that a little bit, but just briefly thinking about like, how did that happen? Broadly, that happened since World War II, the countries of the world creating international organizations, right? Delegating sovereignty through treaties and international organizations to commit themselves towards removing trade barriers and moving towards free trade. Right? And there were two sets of those. One is what started as the GATT, or the General Agreement on Tariffs and Trade, in 1947, became the World Trade Organization in 1995. That's the global multilateral institution, which is most countries of the world, right? Signing on and joining and liberalizing trade based on reciprocity and what's known as the most favored nation principle. So reciprocity is the idea that if I lower my tariffs to let you into my market, you will lower your tariffs to let me into your market. It's reciprocal. The most favored nation principle is if we're all members of the WTO and I lower my tariff barriers with David and he lowers them with me, then those reductions get extended to everybody else that's part of the club. So that's the idea of how we move towards free trade. The other is, you could sign bilateral or small and multilateral agreements, like the European Union is actually a free trade area. Right? And you could move faster than the WTO or deeper than the WTO. So there's Mercosur in South America, there's the European Union, there's NAFTA, or what used to be NAFTA and is now the USMCA in the United States, with Mexico and Canada. And what happened is countries removed their trade barriers, right? So I showed you lots of countries, Japan, European countries, Canada, Mexico, Brazil, most of them look something like this with some sort of variation, but the general trend holds. And that led to what you're looking here, a fourfold increase in international trade. Right? A 400% increase in international trade is a huge explosion of international trade. Unprecedented growth and prosperity around the world. Not without winners and losers, right? But this is the post-World War II era has been an unprecedented era of economic growth and prosperity. That lasted till about 2016. Right? Donald Trump is a dyed-in-the-wool mercantilist. Right? He believes tariffs are the solution to pretty much every problem and the answer to pretty much every question. But Joe Biden pretty much kept in place all of the tariffs that Donald Trump put in place when he was president. First thing Donald Trump did when he came into office on the first day, you might recall, was withdraw from the latest trade agreement we were about to sign, the Trans-Pacific Partnership. Biden declined to re-enter that agreement. Trump, along with Barack Obama, had held up the appointment of new justices, judges at the World Trade Organization, to the point that there were not enough judges to have disputes settled in the World Trade Court. Biden kept that policy. So this is, in many ways, while we're talking about Donald Trump, it has, in the last decade now, been the bipartisan policy of the United States government to engage in more mercantilism. Right? Less cooperation through international trade institutions and the use of a bunch of different trade barriers that we have not seen, right, levels of these again since about the 1950s. So I wanted to point that out, but then again, there's mercantilism and there's mercantilism, right? So the mercantilism we're talking about with Donald Trump is you can put up tariffs, whatever you want, on any country for whatever reason. Right. That is very different, right? The two parties are not the same in that regard, and kind of the use of trade policies. Trump threatening 200% tariffs on champagne and wine for Europe, just sort of on a whim, right? Not following through with it, but other things he has followed through with. So I wanted to start with that, right, before we get into some of the more specifics of this is a massive departure from a very, very long trend of trade liberalization, right, since World War II, around the world and with US policy as well. All right, so the next thing I do want to do is very briefly on one foot, trade economics and politics 101. Okay, so some of you this will jog memories, some of you are taking courses of these, but how do we think about things? Okay. So the idea of why is free trade good and kind of why do most countries follow, right, mostly free trade policies is that countries are different in the endowments that they have. Some countries are capital rich, some countries are labor rich, some countries are natural resource rich. And the idea of Adam Smith and David Ricardo in 200 years of economic theory is you should, based on what factors you have, produce goods that use those factors intensively and specialize in those goods. That is an efficient allocation of resources, and then countries can trade with each other. Right. Generally, the pattern you see then is rich countries specializing in more capital-intensive goods, right? Things like pharmaceuticals, Silicon Valley, high-tech manufacturing, financial services, things that use human capital or financial capital. And you see developing countries specializing more in agriculture, natural resources, and things we used to make here in the United States in the 1950s that then went to Taiwan, that then went to China, that now have gone to Vietnam. So you can think about textiles, right, and toys and things like that. And so countries will specialize. There will be trade. That is good in the aggregate for countries. It's good for the global economy. It's good for economic growth. The problem with that, and why I'm a political scientist and not an economist, is the really interesting part of that is it creates winners and losers. So if rich countries like the United States specialize in things that are capital intensive, people who work in those sectors, right, and capital will win. And people who don't work in those sectors, where the jobs go away and the factories close, where things now move overseas, right, into other countries, they're going to be really unhappy, right? And that's where the politics comes in, as we know. If you think about, the GM plant closing in Janesville. I grew up in Pottstown, Pennsylvania, which is outside of Philadelphia. It was where the Bethlehem steel plant closed in 1982, in sort of early stages of Rust Belt deindustrialization, right? And this is what we know, right, in the US and Europe and elsewhere. That's where the politics of trade is, right? So these are the theories behind that tell us, right, who wins and loses from trade. But that's where the politics of trade comes in. Right? Why is free trade good? And as I'm going to show you soon, why is free trade enormously popular? Because there's more stuff and it's cheaper. We all love to buy things on Amazon and Target and Walmart, right? And so consumers win. The export sector wins, the thing you specialize in, and the import competing sector, the thing you don't specialize in, is going to face foreign competition. And what we know from collective action theory and economics and political science is the distributional losers are small and concentrated, and they're more likely to organize and lobby the government for protection against free trade. I'll come back to that. Just to give you a sense, this is not a new theory. This is not a new argument. This explains an enormous amount of trade politics across United States history. So these are votes on tariffs in 1828 and 1929, two of the most famous tariffs in American history, the Tariff of Abominations and the Smoot-Hawley Tariff. And you can see who supported, who wanted free trade, and who wanted protectionism. In 1828 and even in 1929, the pro-free trade sectors, where we had a comparative advantage, were still heavily concentrated in the American South and in agriculture. The parts of the country that wanted protection, especially in the 19th century, against Britain and France that had the world-class manufacturing industries of the day, were the industrial North. Right? And so you can see kind of how the politics break down according to factors of production and endowments. If you want to read a great book on that, this is Doug Irwin, who's an economic historian at Dartmouth. He's written a 900-page tome called Clashing Over Commerce, which actually, even though it's 900 pages, is a great book about that. So that's the basic way we think about trade, right? Winners and losers, specialization, comparative advantage. Things are more complicated in the 21st century because the world economy is now unprecedentedly globalized. Right? It's not just I use resources from home, I produce goods, and then I sell them abroad. Right? Now it is there are global value chains, and I import all kinds of stuff to go into my production. So this is an example of that. This is looking at a Boeing or Airbus jet and all of the things that are imported into it. Right? So it's harder to say, like, am I pro or free trade? I might produce airplanes that I want to export. And I might want protection against the import of assembled airplanes. But I don't want protection on all the raw materials that go into my plane, because that raises the price of the plane to produce it and what I can sell it for. So things get more complicated. That turns out, even for local and small businesses in Wisconsin, to be a big issue. Right? So these are just a couple news articles. This is Wisconsin knitwear in Milwaukee, right? And this one over here is Arian's company, which is down in Brilliant, and it makes snowblowers. Right? And these articles are about how it is getting very hard for them to produce at a competitive price because the raw materials that go into their products either don't exist in the United States and now can only be imported at higher tariff prices, or just the tariffs have raised the cost of the inputs of their production. Right. So a lot of small and medium-sized businesses, it's not just Fortune 500 corporations that are now torn about tariffs, right? You want protection from foreign competition, but you're also worried about your inputs of production increasing in cost. All right, so let's get to the politics then. So the starting point, I just told you that consumers generally like free trade because there's more stuff and it's cheaper. So it turns out, not surprisingly, trade is wildly popular in the United States, in spite of all the things with the tariffs and all the policies, right? Consistently, and this goes back, even if you go back to the 80s and the 90s, right? Very solid majorities. There's some partisan divisions, but trade is enormously popular. Why is trade enormously popular? It's one of my favorite charts to show my students. So this is the distribution of the American labor force from 1840 to 2010. So you see, we used to be an agrarian society. There was an era where manufacturing was the name of the game. Although even at peak, everybody worked on assembly lines and America dominating auto manufacturing, more people worked in services. So rich industrialized countries, most people work in the service sector. They are teachers, nurses, they work in retail, they're college professors, right? Farmers are a very small percentage of the population, even in places like Wisconsin now. And we were never a majority manufacturing country. That is a political thing that both parties have latched onto since the 1970s of, right? The average American, right, Joe Q voter is someone who works in an auto factory. That was never actually true, right? So if you think about why is trade popular, most people only experience trade as consumers. So if you own a restaurant on State Street, right, in Madison, right, you work in what we call the non-tradable sector. Your entire business is predicated on local business. You're probably not importing things. The things you're using, right, in your restaurant and in your bar are almost entirely domestically produced, right? And so you experience trade when you buy things on Amazon, when you go to Walmart, when you go to Target, only as a consumer. If you work in one of these sectors, you also have, right, on your hat that I work in a sector that may be exposed to trade if I work in manufacturing, right, or I work in agriculture. But in general, most people only experience trade. So the median voter, the average voter, likes free trade because they experience the consumers win from free trade side of things. So the question then, I touched on this already, if trade is so popular, why is there so much protectionism? And this is where we get into collective action and who organizes, mobilizes, and lobbies. Right? This is one of the classics of political economy, Mansur Olson. So you get Mansur Olson with laser eyes, writing about, right, the costs of free trade, the losers from globalization are heavily concentrated. They're small in number. There's certain firms and sectors. They are very well organized to lobby and pressure governments for protection. This is not just true in the United States. It's true in European countries. It's true in Japan, right, et cetera. So the distribution of losers from free trade organize politically, and they get protection. But politicians offer mostly free trade because you can't have so much protection that you're going to lose the average voter's political support. So you're kind of trying to trade these things off, right? And the reason why there is less collective action amongst the consumers is trade protection is basically death by 1,000 cuts for all of us, right? So how many of you are angry and mobilized politically because the sugar you pay for because of trade protection is about 35 to 40% more expensive than it would be if we imported sugar from other parts of the world? Where are the angry sugar and milk consumers of America? We don't lobby and organize. We grumble, we pay our extra 40 to 50 cents, right? And we move on. The sugar producers that face foreign competition are really well organized, and there's only a few of them. And the steel producers and other sectors lobby. So that is one reason why there's protectionism. Now let me just think for a second about what is the problem. Whatever the diagnosis that Trump thinks, right, tariffs, like what is the problem he's trying to solve and what is the problem that Barack Obama and Joe Biden were also trying to solve is over the last 30 years, even though the US, right, is primarily a service economy, manufacturing is a big deal for certain sectors and a certain portion of the population. And the world has transformed where we went from the largest and most globally competitive manufacturing economy in the 1950s and 60s, first to where we face competition from Japan and Germany, right? I am old enough to have been in high school where we thought Japan was going to take over the world, the way we now think China, right, is going to take over the world. My students look at me like I have four heads when I try and explain to them of like Michael Crichton, Tom Clancy, what the world was like in 1989. Everybody thought Japan was going to take over. They think I'm crazy, right? But China has gone from being a poor agrarian economy, not plugged-in global economy, to being the world's manufacturing powerhouse. Right? And that has been politically salient, especially in the Rust Belt, right? Places like Pennsylvania and Wisconsin. And so tariffs are a possible solution to that, right? Or at least a political solution to try and slow that down. They're not going to reverse things, but to slow it down. And you can see on the right, so you can see the graph on the left. On the right, it's who is the largest, who do you import the most from, right, around the world? And so it's gone from, it used to be us with everybody, now it's China, right? So we weren't and never really were a manufacturing economy in economic terms, but politically it resonates, especially in the Rust Belt, right? Or if you think about North Carolina and the furniture industry being decimated, right? You can go around the country and think about places where the largest employers used to be big manufacturing industries, and those jobs are not around anymore. The big thing that's driven that is actually automation, right? If you've ever been to an auto factory now, I toured the Audi factory in Germany a couple of years ago, and it's basically 5 guys in white coats and robots, right? So it's more automation and technology than trade, but it is much easier to blame foreign countries and trade politically than it is to say automation and technological change has been the main problem. So the problem that Trump is trying to solve with tariffs is a political one, which is how do we rebuild US or maintain US manufacturing? And again, a lot of what Joe Biden did with the poorly labeled Inflation Reduction Act, which is really about climate and green investment, was to try and stimulate green manufacturing, solar panels and things like that in the United States to stem this tide. So could that happen? I will show you one more economic chart here. This is the balance of payments of the United States. Right? So on the bottom half, you have what we call the current account, which you can basically think about as the trade deficit and government spending. Okay, so exports minus imports plus government spending. On the top is the capital account, which is financial flows in and out of the United States. This is an accounting identity for every country in the world. They have to be mirror images of each other. This is how much we are buying from the world beyond the income we are generating. This is us buying all of that stuff with the money the rest of the world gives us. We issue the world's dominant currency, the US dollar. Right? Everybody wants to hold the dollar. We are able to run levels of debt much higher than most countries, and we are the place of investment of first choice in the world. Tariffs cannot fix that. As long as the dollar is the world's dominant currency, we're going to have a capital account financial surplus, which means by math, we have to have a trade deficit. And that is something that I'm quite certain Donald Trump doesn't understand. I think probably Joe Biden and Barack Obama understood it, but don't really want to talk about, because telling people that protection is not going to solve the trade deficit and are not going to bring the manufacturing jobs back to the 1950s, right, is politically unpopular. But that is math. All right. Let me talk about the policies then. Right. So what is our trade policy is a really difficult thing to answer because it changes almost every week. Right. There are some experts, Ernie Tedeschi, who works at the Yale Budget Lab, who are doing heroic work, trying week to week and month to month to actually track what our tariff rates are right now. But you may remember Trump came up with his reciprocal tariffs last year and basically said, here's a list country by country. This country gets that tariff, this country gets this tariff. That is a direct violation of the World Trade Organization commitments, where we talked about most favored nation and everybody gets the same negotiated tariff rates. Right? So our tariff rates, there's a ton of uncertainty. The tariffs are heavily costly. So this is the latest attempt from the Yale Budget Lab to quantify, right, by household income decile. So if you divide the US economy into 10 categories by income, right, we're talking about somewhere on the order of $1,000 to $2,000 per household. That's a lot. If you think about how angry everybody was about inflation, inflation over several years had about that much damage to people's purchasing power. Right? So you can compare the hit from tariffs to the hit from having 7-8% inflation for a couple of years. Can he do that? Right. So I told you I'd address this legal question. No, according to the WTO. Right. So arbitrarily assigning tariffs to this country or that country is illegal. We have signed international treaty. We're members of the WTO. That's part of US domestic law. There's a set of obligations that the WTO imposes on you. What sorts of protection you are allowed to use, what the rules for implementing it. If I give David tariff reductions, you all have to get similar tariff reductions, right? So according to international law and our treaty obligations, no, this is not legal. Is it even legal under US domestic law? All right, so if you followed the tariff debates, you may have learned a little bit about a bunch of clauses in some arcane Cold War era trade laws. Right? Section 301, Section 232, Section 122. What are these things? Right? So it turns out both parties from World War II onward have increasingly created an imperial presidency by delegating more and more power from Congress to the president. One of the things we did was on trade, where trade laws that were written in the 1960s and 1970s at the height of the Cold War all had this sort of vague national security clause, more or less, which said, here's what the president can do on trade, except if he says there's a national security crisis, then he can pretty much do anything. Or he can pretty much do anything at least for 6 months or 150 days or something like that. Right? Nobody really thought that these things were going to be used in the way Donald Trump is using them now. Right? But what has happened is, right, it is sort of legal that Trump can say, all right, I can invoke the Trade Act of 1964 or the Trade Act of 1974 and invoke national security and do a set of things. He's not really doing them the way you're supposed to. So Section 232, you're allowed to impose tariffs if there is foreign competition, but you have to do an investigation through the Commerce Department. It takes time. You have to provide data. He's not really doing it. The latest one is Section 122 of the Trade Act of 1974, which is you can say that there is a sudden international payments problem. Right? Suddenly, the balance of payments has gotten much worse, and that we can invoke temporary trade protection because of that sudden change. Right? I'm just going to go back to this chart here. This is not a sudden change in our negative balance of payments deficit. We have been running very, very large trade deficits for a very, very long time. So technically you can invoke that, but it is not really a sort of honest, good faith use of the law, but it is legal. Right? And again, with both of these things, unless somebody stops you. So the WTO court is not really working right now. So we can't really be sued in the WTO court because there aren't enough judges to hear cases. Right? And it's not clear Trump would abide by them anyway, even if we were. With the US domestic trade laws, right, the Supreme Court just came down and struck down the first of those, which was the IEPA, those International Emergency Act, where you can invoke national security. That was the first justification. That took over a year to work its way through the courts. Right? And the second that happened, Scott Bessent, Trump's Treasury Secretary, basically said, all right, we're just going to move on to the next one. Right? And we're going to use 122. We can only do that for 5 months. Then we're going to invoke Section 232. Then we'll move on to something else. Right? So the idea that like it's a sort of good faith invocation of these trade laws, they're all being used instrumentally and sequentially to justify tariffs. So that's one thing about the legality. The other is about the deals themselves. Right? So there's been a lot of fanfare of, all right, the pattern is Trump threatens tariffs, and then he backs down from it, right? Or he says, now we've had a meeting and there's a deal. Right? Normally, when we talk about trade deals, we talk about treaties that are being negotiated. Right? So Bill Clinton negotiates NAFTA. It's signed, it's a treaty, it gets ratified through Congress. We joined the World Trade Organization and it's a treaty. We have bilateral, we have a free trade treaty with Israel, we have a trade treaty with Korea, one with Dominican Republic and other countries, right? These are actually international treaties that get signed and ratified and become US law. The trade deals that Trump is negotiating are wink and nod deals, right? They're not actually signed pieces of paper. So what is the credibility of those? The whole idea, right, from an international relations, political science standpoint of having treaties is they provide credibility. You're making a commitment, you're tying your hands. You're going to give me something in exchange for me giving you something, but it's codified. And there might even be enforcement mechanisms, right? These are worth the paper they're written on in the sense that Trump could change his mind again. And the concessions haven't really been concessions. Right. The other key feature of most of these trade deals is Trump threatens tariffs. There is a negotiation. And then the agreement is basically going back to the status quo ante. So it's a verbal agreement to kind of codify the policies that already existed. So we're not getting concessions out of this from the other side. The other thing to think about, and this will sort of transition into my last point, which is thinking about more broadly trade and tariffs as part of the future of world order, is you might think that the US doing all of this and embracing mercantilism and trade wars, that it's a threat to global free trade and other countries are going to follow. There's very little evidence that any of the world's other major countries want to follow. So what has been happening now since 2016 is the rest of the world, the European Union in particular, has been going around signing trade deal after trade deal with the world's other major economies. So while we're blocking up the WTO and negotiating non-deals, the Europeans have negotiated a free trade agreement with Canada. They've negotiated one with Japan. They have negotiated one with Mercosur, so which is Brazil, Argentina, and the countries of South America. And they just negotiated a trade agreement that is also a security agreement with Australia. So it used to be the case that we wrote the rules of trade, right? And other countries followed. What's happening right now is the Europeans are writing the rules of global trade. And they're linking the world's major economies together in a set of free trade agreements in which they are at the center. So if we start coming back in the next decade and say, all right, we would like to negotiate new trade agreements, the starting point for most countries is going to be, what did we already negotiate with the European Union? Not what have we negotiated with the United States. All right, so let me finish with this. This is all part of broader debates of what's the future of world order, America's place in the world? Are we walking away from leadership and hegemony? Is this the sort of decline of American power and those sorts of things? So, the end of all things. And there has been a lot of talk about this because of three big developments. One is us and what we've just been talking about, right? So Trump's policies on trade are very similar to Trump's views of NATO, very similar to Trump's views of the United Nations, right? A lot of talk of, all right, this is the end of the liberal international order, American power and hegemony at the center of that global leadership since 1945. So that's one crisis for world order. A second is, and those of us that spend time in Europe, and I lived in Germany, in Berlin 2 years ago for a year, right? The Europeans are dealing not only with transatlantic relations being wildly uncertain and unclear, but the return of war in Europe. right? Russia invading Ukraine, right? Interstate war in Europe obviously violates the UN Charter and the UN system. What does that mean for the future of NATO? What does that mean for the future of war? Europeans and Germans are scrambling to increase defense funding, right? So another crisis at the heart of world order. And then there's the ongoing threat of China, right? So I mentioned this earlier, right? We used to worry Japan was going to take over the world. We worry a little less, I think, than we did 10 years ago because China has its own problems, but we still worry about China taking over the world. Right? And the one thing we do know is that the gamble of the Clinton administration and, say, the German government, which is through trade, we could democratize China and integrate them into the international system, right, to be a sort of rich democracy. That doesn't seem to be the sort of path that things have taken. The Germans called that Wandel der Wandel, right, which is basically, change through trade. So what is China? Are they a partner? Are they a rising hegemonic threat? Are they a declining authoritarian threat? That's a different talk, and we can talk about that in Q&A. But these are big changes, right? And I think trade and tariffs are part of that. One way to think about all of this is Trump's view of mercantilism and his trade policies play into a much bigger view of he thinks about the world in terms of great power politics and spheres of influence. Right? We should be able to do whatever we want in the Western Hemisphere. So the Dunroe Doctrine that people have been talking about, right? That is very much the way that the Russians think about Ukraine and the Baltics belong to us. That is very much the way China thinks about Taiwan belongs to us. The foreign ministry just publicly reaffirmed that yesterday. So are we in an era again of spheres of influence and great power politics in the world pre-1945? Right, the world of the Napoleonic times up to World War I. Right, I am an international political economy scholar. Right, so I think this idea that geopolitics is just something that we discovered, and that it might have an economic component. The economists have discovered a new field of geoeconomics in the last 3 or 4 years. Right, those of us that are international political economy scholars are sort of like, we've been writing about this stuff since the 1970s, right? Geopolitics has been at the heart of international trade and finance forever. Maybe a different geopolitics. It may be us being the territorial aggressor and using tariffs as a weapon. That doesn't mean that it hasn't existed before, or that it didn't exist over the last 80 years. But the aspect of that of things might be really different this time is something to ponder, right? So what could possibly go wrong? This is the worst case slide scenario, right? So I'm going to finish not on this one. I've got a couple more. If you think about if everybody followed us into trade wars, right, and the international institutions like the WTO and NATO that we spent 80 years building and nurturing and expanding really do collapse, then we could be back in a world that looks like the 1920s or 1930s. Right? So these are my two favorite pictures from that era. This is the Security Council of the League of Nations, which, if you remember your history, Woodrow Wilson negotiated, right, proposed at the Treaty of Versailles in 1919. The Senate never ratified it. We never joined. We had a United Nations 1.0 that the Germans were not invited into and the Americans did not participate in. And so you got a Security Council with Belgium, France, England, and Italy. It obviously didn't work very well. Right. But what are international organizations like the IMF and the WTO and the World Bank and the UN if the United States is not part of them and supporting them? The economic side of that is my favorite chart of all time. This is Charles Kindleberger, who was an economic historian at MIT, literally wrote the history of the Great Depression, right? The world in depression from 1919 to 1939. That's the month-to-month decline of international trade from the Smoot-Hawley tariff to 1933. Right, so you start in 1929 and you say there was about $3 billion of international trade, and look how it declines month to month until the world economy has collapsed, as every country in the world put up massive tariffs and engaged in currency wars. So if you thought about the worst case scenario was that. I don't actually think that's going to happen, but it could be, right? So let me end on this and think about what is the future of power and hegemony in the world order. One is, we worried about Japan, we worry about China. China really this is the point at which American hegemony, which maybe already was declining, the decline accelerates and the Chinese kind of become the preeminent leader of lots of things. I am skeptical of that. Others of my colleagues are much more optimistic or worry about that, in the sense that everything everybody is worried about in the United States as a big domestic political problem is actually worse in China. And so if you think about levels of corruption, levels of debt, threats to academic freedom and freedom of the press, personalist authoritarianism. Xi Jinping has purged the military and consolidated power. So if you think all of those are threats or problems for America leading the world, they are also problems for China. The other thing is China faces massive demographic headwinds. Their population is going to shrink by half over the next century, it's projected. And while China has now become the world's trade and manufacturing powerhouse, they are very, very tiny in international finance. Right? And finance, I'm a scholar of money and finance, but finance is at the heart of power in international relations. So the other option is to think about, say, post-Trump America, in which, right, future administrations come back and start to say, all right, we want to re-engage with, proactive American cooperative leadership, free trade, those sorts of things. We have a big credibility problem now. Right? Why should we believe you? None of my European co-authors and colleagues, right, believe for a second that the US can now, for the foreseeable future, and possibly in our lifetimes, be a credible partner. Right? NATO, trade agreements, how can we trust you? Right? Cutting off aid to Ukraine. There's always one more election. Right? And so if the two parties are so far apart on policy, how do we lock that in? So the answer right now is a sort of cautious, I don't know. Right? I could also talk, if you like, about Europe. Right? The other option is a European-led order. I would submit that Europe can't cooperate enough itself at the regional level to substitute for China or the United States as a hegemon in international relations. So still big economic power, number 2 currency in the world, right? Very important, but right, as a geopolitical leader, probably not going to happen. So, I think the reports of the end of American power and hegemony, and Trump is engaging in trade wars and threatening NATO, and therefore everything is different and we're at the end of all things. I think that's exaggerated. But I don't really know what is next, because I do think we have a very big credibility problem. Right? That credibility started with trade, but it is now extended to other aspects of international cooperation as well. Okay. So let me stop there. Again, I have material on Hormuz, and I'm happy to talk about the Iran war as well. But I know we want to get to Q&A, so I will stop there and look forward to your questions.
All right. So thank you. I've got a microphone here, obviously, and I will bring it around to you all as you have questions. But since I'm holding it, I am going to ask the first question about Strait of Hormuz. All right. So Europe says they've got about, at this point, based on what they said, about 4.5 weeks of jet fuel left. Mm-hmm. Just for fun, I was looking a little bit at flights last night, and I saw that if you book a flight from here to Paris, say in the next 2 weeks, you can get it for around $1,500, which that's high for that route. Right. But if you wait longer, it's $2,600 for 3 weeks from now. And it's that for the foreseeable future. So obviously, if it's that for one person sitting on a plane, it's also that for people who are trying to bring things by ship or by cargo. Yes. So where are we going?
Where are we going? You're right about the time horizons, right? So what's going on right now is roughly about a quarter of the world's oil and natural gas goes through this one strait, and it's not going through. Right? There are very few ships going through. Where are oil prices right now? They're at 106. All right, so that's up from where they were, right, quite significantly. But as Bob said, like, the really big shock may be yet to come. Right? So the reason this pattern exists is that oil left Hormuz a month ago. And those ships are now getting to refineries around the world. So there's enough oil to last us for, it depends. If we're talking about jet fuel, gasoline, other things, how long that's going to last. But now you have all these other ships that are stuck on one side of Hormuz or not. I mean, so we don't know how long that's going to last. I mean, the one scary thing that we do know is the producers are drastically cutting production. Right, so it's not just that the ships are not getting through the Strait of Hormuz. It's that the Saudis and others are worried that this thing is going to go on, and so they're looking out over the next year and saying we're going to scale back production because it doesn't make any sense to produce oil that we can't put on tankers and into pipelines. So where is it going? It's really a question of like how long this lasts for, right? I put this chart up just to give you a sense of like who is most vulnerable, right? So the way we think about this in political science and international relations is to talk about the concept of interdependence, right? So when there's a shock in the global economy, how sensitive is one country versus another to that shock? And then like what outside options do you have? So you can think about this is who's trying to get oil out of the strait as a producer, right? And the next chart you could look at is natural gas. So you see it's the UAE and Qatar for natural gas, right? It's the Saudis and the Kuwaitis and others for oil. But then on the right, you see, right, who is vulnerable in the sense of depending on the imports. We are less dependent, right? So the problems Bob is talking about, East Asia and South Asia are screwed more than anybody else. There are already reports in Vietnam, Cambodia, other places in East Asia of gas lines that are been rationing that sort of calls to mind things like the 1970s. Those of you that remember the oil shocks, right? My first memory was sitting in the gas lines with my dad in 1979. I can't remember if it were the even days or odd days, but I remember sitting in that car. So it's a problem for Asia more than Europe, more than the United States, right? We produce a lot of natural gas, we produce a lot of oil, and most of that is for export, right? But things could be reallocated, but there's an asymmetry to the interdependence. But prices are set globally, right? So if, there is a shock in one part of the world, and this is the dominant place where oil and gas are coming from, it will ripple out to everybody. Right. So from the consumer standpoint, I think prices are going to go way up. The real question is, does Trump back down like he frequently does? I have no idea. Is the Hormuz standoff, right? We have a blockade on a blockade, which I wasn't sure could exist, but right. Is that going to last a couple of weeks? And there's going to be a back down to the status quo ante, which is what the trade policies often look like. Then some of this is still going to be a shock for a few months, but that's very different than saying this is if this goes on for a year, then maybe we actually are talking about 1970s type of oil shocks. Right now, the oil price is what, right? It's gone up to 106, but you see, it's like it goes up and down on an almost daily basis because I think the markets want to believe that it's not going to last forever.
Well, and some people seem to know about 15 minutes before, but that's a different issue.
That is a different issue.
Yeah. The other thing that's happening with the Strait of Hormuz is you've got a bunch of digital cables running under there.
Yeah.
Which connect to the banking and finance from the Gulf.
Yes.
So what happens if those get cut?
I don't know. I mean, there are other methods of communication. I don't know. I mean, there is a lot of portfolio capital, a lot of crypto money flowing through. I have a former student who's now in Abu Dhabi, so I was in Abu Dhabi back in December. And, as much as you see all the oil stuff, everything now is about banking and crypto. And so that money can still move across borders, even if the cables are disrupted. But that is very speculative capital, right? So that's the sort of money that moves easy in. And when people get scared about the future of an economy like the UAE, could move very quickly out. So you could think about a double shock, right? You have the oil the oil and gas shock, but you also have capital flight. Even if the Hormuz crisis went away 3 weeks from now, if you're thinking about Western investors now looking forward of, we put all this money in the Gulf states for the last 20 years, right? Are they really safe places to invest for the next decade? I don't know that the answer to that is yes, in the same way.
But, we still talk about the leftover, the impact of the pandemic.
Right.
Yeah. So just thinking about how this could ripple out at the same time.
Yeah, and a lot of those effects, like, the long-term effects of the global financial crisis were unintended. The long-term effects of COVID we're just learning about. So these are sort of the things we know. You don't want to invoke Donald Rumsfeld, but the known knowns, the unknown unknowns, this sort of thing. Like, we don't know the long-term consequences of these things for broad investment patterns and things like that. Yeah.
Okay, I'm done with my questions. Who has some? Right.
In regard to buying oil, in regard to countries buying oil,
Yes.
there has long been, and I don't know if it goes back to Kissinger or somebody, but oil is always traded by in the US dollar.
Right.
Now I have read more and more that there is movement toward yen trading and circumventing.
Or alternative, renminbi, Chinese currency, yen, Japanese currency, alternative currencies. Yeah.
Impact.
So I'm going to go back to this chart that I showed you earlier, which is, this is one of the reasons this chart exists, right? So there are about 10 countries in the world that have the privilege of issuing what's known as a reserve currency, which is the currencies governments want to hold as reserves and which international transactions, right, take place in, because other countries' currencies aren't considered stable enough, right? They're too risky. About 60 to 70% of that is dollars, depending on what we're talking about. If we're talking about foreign exchange reserves, governments or trade or financial payments, about 20 to 30% of that is euros, and about 10% is everything else. And the everything else is Swiss francs, Canadian dollars, Australian dollars, Japanese yen, and Chinese renminbi, and the British pound. And that's basically it, right? So one of the reasons we run massive financial surpluses is everybody wants to and needs to hold dollars, because things like oil, the trade takes place in dollars. So when the Saudis sell oil to the Chinese, it's priced in dollars and the transaction takes place in dollars, which means everybody needs to hold dollars, right? Think about, so the Saudis will say, all right, we're trying to insulate ourselves. So the Chinese will say, now we're going to settle oil transactions between Saudi Arabia and China in renminbi, in Chinese currency. What if other countries decide to do that as well? Right? So say the 20 largest economies say, instead of all dollars, it's going to be 50% dollars and 50% renminbi, and we're going to hedge against the uncertainty of the US dollar. Now everybody needs to sell dollars and hold more renminbi. What will happen to the value of the Chinese renminbi in the exchange rate? It will go up by about 20 to 25%. That will destroy the Chinese export sector. Suddenly, China's exports now become 20% more expensive because they are denominated in Chinese currency. And you have to sell your currency to buy renminbi in order to buy Chinese goods. Right? You and I don't do that when we go to Target and buy things that were made in China, but down the line, some American companies sold dollars and bought renminbi to import that good. Right? So China's entire development strategy, and the reason it has become the world's manufacturing powerhouse over the last 30 years, is having the value of its currency low. They do not want the renminbi to replace the dollar, because this chart would have to flip. This chart is the opposite for China. Their trade is the top. They run a massive trade surplus and a giant capital account deficit. Right? So a lot of the world economy is, we buy things from China with the money that they send back to us by buying US government bonds and holding American currency. So far it's symbolic and it's political, right? It could accelerate. I mean, that's sort of what I was talking about if we really think this is a break in American power and hegemony or declining. The problem is the currencies you would hold are either the renminbi or the euro. And so everything I just said about China also applies to the German manufactured export industry. So neither the Europeans nor the Chinese really want the dollar to no longer be at the center of the world economy, because that would kill their export industries. Right? So there's a big trade-off there. So the Saudis have made rumblings about that. The Chinese have made rumblings about that pretty much every time the US does something that they don't like for the last 20 years. So they're talking about it again. But I really don't think Xi Jinping wants like the renminbi now to be the thing that oil is priced in, the thing that other commodities are priced in, because that means everybody in the world is now going to hold your currency. And that's going to drive up the exchange rate. So we'll see. So far, it's symbolic. Again, a lot of this depends on how long this lasts. But I don't think it's going to go there yet.
Yes, sir. I just have two quick questions. One is, on the Strait of Hormuz, I thought Trump was saying that he wanted to bring in the US Navy to escort ships through the port so that they could move in. If that would be the case, wouldn't we be able to move way more oil through that area? And then the second question is just a lot more simplistic is, what have you guys looked at also economically what this is costing the average American, the tariffs, or did you say that, was that the $2,000?
That was the $1,000 to $2,000.
Okay, so you said.
Yeah, but that's just on tariffs. That's not accounting for energy
That's
increases or other things, right? And that's, again, there was, what was the estimate before the Supreme Court case? And then you substitute in these new Section 122 justifications and assume you can replace 90% of the tariffs you're not allowed to use now with something else. So it's a moving target, but the ballpark is about, $1,000 to $2,000 per household on the tariffs. So the thing on the blockade is, I mentioned this, it's sort of like, you can't break up with me, I'm breaking up with you. Like, the Iranians have set up like an iPass thing going on in the Hormuz, where they're gonna tax ships going through, and they're gonna decide which ships can go through. On top of that, we have, I think, 15 or 20 ships now that are naval ships that are blockading the ports of Iran. Right? And the idea behind it seems to be, if we make it impossible for Iran to export anything, then they're going to back down on the blockade of the strait. But you're not going to send a carrier group in there to actually forcibly escort ships through. First of all, the strait is too narrow, right? It's shallow, is my understanding. But second of all, like, that is a recipe for, us actually losing a couple of destroyers and having mass casualties. And I think that's the thing Trump really fears. I mean, if you look at the public opinion on the war, like, it's already wildly unpopular. Most of the time when a president starts a war, it starts popular. Think about Vietnam or Iraq or whatnot, it starts popular and then it goes down over time. He's starting with this is wildly unpopular. The thing that we know from public opinion that moves the American public to really dislike a war is casualties. Right. So the second you send in the Navy and something goes wrong in the strait, right? So I don't think the idea of like, you can blockade the strait, but opening up the strait is not something that you can do without full on shooting war, and nobody knows, I think, how that would actually turn out.
David and I were talking the other day about how when it was briefly open, maybe unsurprisingly, the ships that went through were empty European cruise ships.
Yes.
Yes, like
right.
6 of them made it through. They ran straight. Other questions over here?
Right. I was wondering if you could talk about the role of Vladimir Putin, because recently, maybe about a month ago, he made a speech, and I don't know where it was, must have been to the Russian media, where he said the vampire ball is almost over, referring to what strike.
Okay.
And it seems like he's not doing great domestically, but what are people going to do?
Yeah.
And he's getting what he wants. So it's the last, 15 years, he's been pulling the strings of at least Trump. I mean, he's a Russian asset, I think. And I mean, so you haven't talked about him, and I'm curious, what role Russia is playing right now.
Yeah. So I think, I talked about this and this idea of the way Trump thinks about the world is very much in like the big powerful countries can do what they want in their sphere. And actually the US, like we can kind of do it everywhere, but that's how Putin views the world, right? And Putin has viewed the world that way for a very long time of, we're in Syria because Bashar Assad is our ally, right? Ukraine is ours. It's always been ours, right? I mentioned I was in Berlin 2 years ago. You can go to there's a giant truck tower park in old East Berlin, which is where the Soviet War Memorial of World War II is. And you can read the quotes from Stalin there about how we are coming to liberate our ancestral brothers in the Baltics and in Ukraine. And it's as if Vladimir Putin was saying these things like, right, he believes, and many Russians believe, Ukraine belongs to us. This is our sphere of influence. This is where the idea that NATO enlargement, right, caused the Ukraine war is the West encroached into what is our ancestral territory. And so, if Trump is saying anything in the Western Hemisphere is ours and we can do whatever we want and Canada should be ours and Greenland should be ours, right? Xi Jinping likes that because that's the logic of Taiwan is ours, right? And it is the logic of Ukraine is ours. And so I think Putin, that's kind of where I think about Putin. Russia is weak relative to, I like this chart, okay? So Russia is a distant third when you think about great powers in the world, right? And actually fourth if you think about the EU as a power, or fifth if you think about Japan's economic power, and you can go down the list, right? China, militarily, second in the world very clearly now. Global manufacturing trade powerhouse. So what you're looking at here is who are the biggest actors in the world in trade? It's exports on the left. And who are the biggest players in the world in finance on the right? Right. So the circles are like, how big are you? And then the lines are connecting people. Right. And so you can see, I mentioned China is weak in finance. You have like the US and China, and then you have the European Union are like the big three. Russia is tiny. They export oil. They're a petrostate. Right? They're not a trade manufacturing powerhouse. This is finance. So you can see like how much bigger the US is in finance than everybody else. But the Europeans collectively are big. You kind of have to squint to see China, right? They are much smaller. And Russia is here. Like you can't even see them, right? So Putin is weak, right? The Russian army has lost, I think, 1.2 million soldiers and most of its war material, and has basically gained nothing. Like if you look at the map from February 21st, 2022 to where the front line is in Ukraine right now, it basically hasn't changed. So Russia is not going to take over Europe, right? They're not going to become the world's political or financial or geopolitical hegemon anytime soon. But a world where it's divided into sphere of influences and Russia gets Eastern Europe and Central Asia, right? Vladimir Putin likes that.
Yeah, like what if they start to invade, like Latin or something?
Right. So this is when you think about, the countries that have contributed the most aid per capita to Ukraine. It's the Baltics, it's Poland, right? Sweden and Finland joined NATO after years of being neutral. Right. So, the Eastern Europeans and the Nordic countries are very concerned about this. But if he couldn't invade Ukraine, it's not clear he could invade the Baltic states. NATO has vastly superior military assets than the Ukrainians had at the time. Right? They've developed in a world competitive drone industry now, and it's turning the tide of the war. But, so Putin likes this. Right? And this is one of the things with the Iran war is, what is the logic by which we, the United States, condemn the invasion of Ukraine. If we engaged in a war on Iran that went neither through the UN Security Council nor through Congress, right? The logic of the world standing up and saying, right, Ukraine is illegal and bad, is you just invaded another UN state completely unprovoked and you violated the UN Charter. But it's the same, right? Putin can turn around or Xi Jinping can turn around and say the same thing now. And so that's the credibility problem, is we always had that credibility by supporting international institutions and international law and, you know, agreements, that it's hard for us to make the claim that we have that leg to stand on.
Totally changing the sphere of discussion to domestic politics. You mentioned Biden keeping in place many of the kind of protectionist structures that Trump had put in place. I have a hypothesis for why that might be. I'm curious about your thoughts about the thinking behind that.
Yeah. I mean, again, I grew up in Pennsylvania, so I saw Joe Biden on TV because a Delaware senator is really like a Pennsylvania senator. So I've Joe Biden since I was a little kid, basically. Like, you know, he thinks about the US economy as a guy who's in his 80s, right? And when America was a manufacturing powerhouse and the Rust Belt is really important, and all of his rhetoric and language about how he thinks about the economy was that way. But he's also, you know, he's a keen student of domestic politics and knows what the Electoral College looks like. And there's a long history of, you know, I will use tariffs or the talk of protection and compensation because I know I need to win in Ohio and I know I need to win in Wisconsin and Michigan and Pennsylvania. So it's not a, you know, again, I'm a political scientist, not an economist. Like, it is politically efficient to adopt these policies, even if it is economically inefficient, right? And so that's where the structure of our institutions and the Electoral College and things like that. But the Democrats as a party haven't figured out how to talk about trade for a very, very long time, right? So
I had thoughts about that.
But you know, increasingly they're the party of white collar urban, right? You know, white collar urban professionals who work in the pro free trade sector, right? Experience trade only as consumers or work in the competitive industries that benefit from free trade. At the same time, you still have the Rust Belt and the Electoral College and rural America where you need to win votes. And so, like, how do you talk about both of those things as a Democratic candidate or a Democratic president? And, you know, the headlines would have written themselves if Biden came in and got rid of all of Trump's tariffs. Everything on day one back in 2021, the Republican Party would have been, the Democrats are abandoning the working class again, right? And it politically would have sold even if it wasn't really true, because the working class is actually the median voter who works in the white collar sector. But that's how the political rhetoric works in American domestic politics.
Okay, now we're back to
Upon the death of Prime Minister Xi of China, what would you say the odds are that China would remain a viable state, given that Xi has murdered basically all the prospective successors of his, given the topographical and cultural differences among different regions of China?
Yeah.
Will it remain a viable united country?
Yes, I think so, but it's a good question. It's one of the reasons I am skeptical of the China is going to take over the world. Is China is a big bureaucratic authoritarian regime. So it's not a one-person dictatorship. Putin has consolidated power much more, right, than Xi has. But Xi, compared to where things were under Jiang Zemin, right, massive consolidation of power. China won't disappear as a state, but I think what you're getting at is there is going to be a leadership battle. And so you don't have to think about it as the state will disintegrate or the death of Stalin or something like that, right? But who is the heir apparent? And there are going to be different factions. And China has all of these problems. right? Its export-led growth model is no longer working in the same way. China used to grow when they were poorer at 15%, then it was 10, then it was 5, now it's 3. They have massive inequality. If you look at Chinese debt and count all of the debt of the state-owned banks and corporations, Chinese debt is actually much worse than American debt. They have their demographic problem, their environmental problems are more severe than us, and their GDP per capita is 1/5 of ours. Right? Parts of China are as rich as the United States, parts are as poor as North Korea. So China won't disappear as a state, but once she dies, there's a domestic leadership struggle. And there is a lot of uncertainty about, I don't know, you could have a new authoritarian leader. You could have a series of authoritarian leaders. It could be the late Soviet Union. There could be a democratic revolution. I'm not a China expert, but my colleagues who study China also tell me, like, people have no idea, right? So in that sense, like, the idea that China is going to step up and be like the global hegemon, right, really strikes me as not the likely outcome. But I have no idea beyond, right? And Xi Jinping's 73, right? He could live for another 20 years. There was a recorded conversation of he and Putin, right, that science is going to keep the two of them alive until they're like 125 or 150, right? But, you know, it could be next year. Nobody knows.
There's one behind you too. Yeah. I wanted to come back to the free trade issue. You showed that,
Yeah.
you know, from the end of World War II all the way to about up till, well, to Trump's tariffs, that the increase in globalization, the push for neoliberal capitalism, free trade.
Yeah.
And during that time with NAFTA, there were a lot of concerns about outsourcing and, you know, moving jobs overseas. I mean, you talked about the Rust Belt and Cleveland and Bethlehem, Pennsylvania. Is there any data or any statistics that show that moving away from free trade and towards this mercantilism will actually increase reshoring or increase manufacturing, which has been the concern all through this liberalization and free trade? And the hopes that if we stop that, then it'll bring back industry, it'll compel companies to reshore and rebuild American industry, which he said never was the case to begin with.
Right. So broadly, the short answer, I think, is no. Like, you know, this is a 200-year trend of the transformation of, this is what happens as you go from being a poor country to a middle income country to a rich country. It's structural transformation from agriculture to manufacturing to a service-based economy, right? So tariffs are like the finger in the dike pushing against the winds. You know, could you get manufacturing as a share of the economy back to here? Yes. Right. So a lot of the investment in green technology and the IRA and Infrastructure Investment Act, like manufacturing as a share of GDP could go back up to here with targeted investment. The thing is, it won't be employment. And so I mentioned the auto factory before, right? So you're not going to have factories that employ thousands of workers. You're going to have factories that employ a couple dozen workers with a ton of robots, right? And that's the thing. It is politically easy to blame China, but more broadly to blame this on globalization, when actually what it is technological change, structural transformation, broad trends in economic development over time. So tariffs can't fix that, just like they can't fix the US balance of payment as long as the dollar is dominant. And that's the part where, like, I don't think Trump understands that, right? I actually think that, you know, the last 2 Democratic presidents have understood that. But how do you sell that and what policies do you put in place? So again, to get to the question of, like, you have to win the electoral college and you have to win the midterm elections, and saying that tariffs are going to bring back jobs is a really great way to do that. But it's not an American trend. Like, every rich country, you look at Canada, you look at Germany, you look at France, you look at the UK, it's happened over time. You know, you and I know we were talking about earlier of the support for far-right and populist parties is linked to long-term deindustrialization as well as shorter-term things like economic crises. So again, I grew up in Pennsylvania, where this has been a problem since the 1970s. right? There was protection in the 60s and 70s that kept the steel plants open for 20 years longer when things were already moving to Korea. But you were never going to save a steel plant. You know, in Pottstown, Pennsylvania, was the plant where the Brooklyn Bridge steel was made. There's always the sort of thing like, but there was no chance in 1982 you could kind of bring that back to where the world was in the 1920s. So the tariffs are pushing against the wind.
Magic happens and poof, all the tariffs go away. What
Yeah.
happens?
All the tariffs go away. So you and I are $2,000 richer. Globalization continues on a 80-year trend that has started to decline as we've reached more and more. It's harder to kind of have exponential growth in that. But I mean, that's one thing about, there were lots of predictions with the global financial crisis and then COVID and then the trade wars of like, we're going to have a rollback of globalization. Things keep going. All right. I mentioned those global value chains. Like, that's just the way the world economy is structured now. We're not going to go back to a world of we source and produce everything here. The Europeans do that. We sell finished goods to each other. So you and I are going to go back to buying things at Amazon and Target and Walmart that are made in other countries. They will be cheaper. We like that as consumers, right? I talk about with my students about economists call this reveal preferences. You tell people when we do surveys what you think about politics and economics, and then you show me what you really believe with your behavior, right? So we like cheap stuff from foreign countries, and we reveal that with our behavior, and that will continue to be the case, I think. The big thing that you can't restore is the certainty, right? So I showed you I talked about the massive uncertainty, and the whole point of all of these trade agreements over 80 years was not actually free trade, right? It was to not have this, right? So the goal was free trade, but there were lots of ways where you could legally cheat under all these trade agreements, and you could put up protection for a little while. The goal was we're writing it down and codifying it. We're signing it into treaties which become law. There's even a court at the WTO where you and I can sue each other as countries. If I think you're cheating, you may cheat for a while, but eventually you'll lose and have to change your policies back. So the idea of trade agreements was not totally free trade, not that everybody would live up to them all of the time, but you reduce the amount of uncertainty about things by about 95%. And so the other way to get at your question is it's not you and me that things will change. It's big American firms that are thinking about investing abroad, or Japanese or German firms that might think about investing in the United States. If you don't know what the rules of the global economy are going to be month to month, week to week, year to year, you're not going to make long-term investments. You don't want to build a factory in Georgia if you're BMW, if suddenly all of the trade and investment rules are going to be ripped up and shredded. Right? So the foreign direct investment from big multinational corporations might change, right? But the thing that didn't happen, this also gets a little to your question, is the reshoring didn't happen. American firms that were producing in China didn't come back to the United States. They went to Vietnam, right? So Trump puts up tariffs on Chinese goods, right? And American goods, yeah, it's actually here, right? So you can sort of game the system and think about where could I go, right? So if you're targeting China, you were already thinking about as an American firm moving out of China because they got richer and their labor costs are a lot more expensive than they were 30 years ago. So maybe you go to Vietnam or Cambodia now. Lots of goods. China moved factories to Vietnam, exports went to Vietnam and then moved through Mexico to the United States. There's, if you don't have global rules, but you have country by country rules, you can arbitrage it, right? And so creating all that uncertainty and then creating a system that basically there's all kinds of rent seeking and arbitrage that can take place. That's the thing that we lose by undermining all the international institutions. We had created a lot of certainty about world trade and the global economy. Not everybody was happy with it, but at least they knew. for the next 5 or 10 years, this is what the world looked like, and I could make decisions based on that.
We have one last question. Status quo anti-Trump and because I don't think anybody would challenge the statement that America's hegemony has been diminished and will continue to be diminished. And maybe Mark Carney was leading the way in saying that those people who have been part of this world that we talked about in terms of the West have been too dependent on the United States.
Yeah.
And, matter of fact, have been inordinately dominated by the United States. And now in this situation, there's realignments taking place. One might say that in a sort of kind of way, they have now been forced to stand stronger and come together and form alliances like you were talking about before. So if we've seen changes, Japan has changed what their staff occurs, and India is rising at the same time. So what is the status quo after Trump in your estimation? What's the status quo?
That's a hard question. It's sort of what I was getting at. You know, I don't think you can just roll it back. You know, Biden, when he got elected, could very much say, all right, that was an aberration and we're picking it up again. The next Democratic president can't play that card in the same way. You know, I was born in Montreal. I'm a native Canadian. I followed Carney in his speech and whatnot. You know, my Canadian relatives are all basically saying, like, we're never coming to America again. Like, it's never, they are rightfully, like, totally angry at the United States. I don't know that US-Canadian relations can be repaired like in a generation or not. I have a colleague at the Université de Montréal who studies European integration, wrote an op-ed a few months ago about Canada should apply to join the EU. Right? Not that he thought it would happen, but as a signal of precisely what you're talking about of, right, we are moving closer and hedging our bets and thinking about ties. Yeah, they all are.
Yeah.
All that said, nobody wants the cost of a world in which America is not leading. Right? The Chinese don't want it, as we were talking about before. Like, the Canadians and the Germans and the British and the Poles and the Italians, everybody is thinking about what does NATO without the United States look like? What does European defense look like? What is world trade? As much as they're angry at the United States and maybe can't trust the United States, they all would also like a world in which the United States was back supporting international cooperation and mostly free trade, remained in NATO, and was mostly footing the defense bill, right, for the Western alliance, even if we don't have the same credibility. So I think, you know, Carney gave his speech at Davos. And then if you read, and Friedrich Merz gave one and talked about how Germany has to step up and be more independent. And then if you read their statements after the Iran war was started, didn't mention the UN, didn't mention international law, didn't really mention international cooperation. So all the things that Carney lamented in the shop window speech of these are gone, they're important, we're lamenting their demise, did not condemn the Iran war as being just like Putin invading Ukraine, right? And that to me was a signal of like, after all of this, we still don't want to totally break off from the United States. And, yeah, so I don't know what that future looks like, right? It's a future where we might want to, again, supply hegemony and other countries might not demand it as much, but they don't want Russian hegemony and they don't want Chinese hegemony, and their ability to lead on their own as a group of like a league of Western democracies that doesn't have the US in it is politically and economically limited. So I don't know like how that all falls out. But I think that would be the most likely outcome of like, you know, regular American presidency after Trump is facing those types of problems, and how do we make commitments with our allies going forward?
It doesn't eliminate by any means that America's hegemony. That Michael wasn't proposing that.
Yeah.
It's that
the balance between the giant dudes leading the pack has been diminished and the others have gotten.
Yeah, I mean, the gap in power, especially on finance and military stuff, you know, whatever one thinks of the Iran war and whatever one thinks of Venezuela, they are demonstrations of the massive gap in American military power to everybody else. Like, we weren't able to just go do that, right? And you can think those are bad ideas, but China can't do that. NATO without the United States can't do those sorts of things. So, you know, again, I don't know where this all plays out, where it all turns out. I think the trust but verify, like, we might cooperate with the United States again, but we want to make sure we have better outside options. I think the Japanese and Koreans very likely have nuclear weapons a decade or so from now. Like, again, you know, maybe the US remains committed, but we can't depend on that facing China and Russia. And so I don't think you can't just wind it back to like, it's the end of the Cold War and America is the lone superpower and we're going to go back to kind of that order that existed in the 90s. That's gone, I think, forever.
All right, thank you, Mark Copelovitch.
Thank you.